Today's release of the Bank of England June meeting minutes revealed the Monetary Policy Committee voted 5-4 against restarting the gilt purchases. Mervyn King and several members voted for a £50 billion rise, increasing speculation that the Bank of England is close to launching a new round of monetary stimulus as soon as next month. Joining me now to discuss the UK economy is John Hydeskov, Chief Analyst at Danske Bank. John, with an unexpected fall in inflation in May alongside stunted growth, building the case for further easing in the UK, when do you expect the Bank of England to start back up the printing press?
Well, I expect the Bank of England to restart the asset purchase facility next month, most likely to increase the program by 50 billion. So that'll take total purchases up to 375 billion in total, which is a lot of money for the Bank of England, which is basically the central bank that has done the most in terms of QE already. But it seems like they think that more is still required.
The market seems primed and priced in for more easing by the BoE. But although more QE is believed to be on the way, some still question how effective such a move would be, considering the economy continues to flatline after so much stimulus has already been poured in. Is this really the best way to get much needed credit flowing into the wider economy? Some also say that instruments other than gilt purchases may also be more appropriate to stimulate the economy.
You're right, it is a key concern for the Bank of England that buying more gilts might not be the most effective tool. Still, it's the preferred tool of the Bank of England, and I think they're going to carry on with gilt purchases and not to expand the assets they are interested in. They celebrated the first round of QE with a working paper in which they concluded that they had brought down the long end of the curve by roughly 100 basis points. The second round of the asset purchases was not that effective because yields were already low, and I think the reason for the low level of yields can be found elsewhere. That's a flight to quality, flight to safety. The market is keen still on buying gilts for other reasons. Perhaps some of it can be explained by the euro crisis, and gilts are still in high demand in the market. So it might be a little bit weird that they want to bring yields further down, but it's a way of getting more money out in the system, and it's still the preferred option.
One more active policy easing by the BoE is likely to continue weighing on the pound. So what are your forecasts for the British pound going forward?
Well, if the Bank of England is the only central bank easing monetary policy, it would be a quite easy forecast. Then it would just be to take euro sterling higher. But it's not that simple, unfortunately, because we also believe that the ECB is warming up to another round of long-term refinancing operations. We also think that the ECB is set to deliver a 25 basis points rate cut when meeting next month. So I think sterling or euro sterling will trade a bit of sideways for the moment, because we are basically caught between a rock and a hard place, to the sense that we are dealing now with two central banks set to ease monetary policy next month. But AT1 was, we met some fairly strong resistance here today, and it will require more easing from the Bank of England to break that level. And also, we have to remember that sterling remains highly correlated with the US dollar, and we have a fairly important Fed meeting coming up tonight, where we believe that the US central bank will deliver more QE.
With problems in the UK's neighbouring Eurozone economies flaring up again, what about the stability of the UK's banking system?
Well, the extended collateral term repo term facility was actually intended to improve the liquidity situation in the banking sector. Now we know that it probably won't be a massive liquidity flood we will see at least this month, but I think the Bank of England is still trying to remove some of the stigma of this new facility. It's a fine art of making banks interested in such a facility and actually use the facility. I remember that the ECB also struggled with the same reputational challenge when it introduced the first round of the LTRO. I think that this will prove an effective tool to recapitalize the banking sector. But you're right in pointing out that the financial sector is not as strong as it used to be, and it's not basically delivering the same input to the economy as it used to do. And that's probably also why the UK economy is lagging behind similar economies. The UK has not been able to restore the same activity level as before the crisis, and that's in contrast to similar economies like Germany, the US, and also France.
John, thank you very much for joining me. So there we have it, John Hydeskov from Danske Bank on the Bank of England monetary policy and the UK economy. We've got a lot more coming up on Dukascopy TV today, so make sure you do stay tuned for the latest. But for the moment, goodbye.